So yesterday at 10:30, it felt like a sigh of relief. There were a lot of unanswered questions, but just we had a lot of green on the screen, and we felt pretty good. But of course, later on in the day, it all changed. In fact, just about every stock in the market went the exact opposite way. If something was up 1.5%, it closed down 1.5%. And I got to tell you, it was the inverse, and everything really looked really crazy. And I put the blame on Peloton. I really do. I think it was a gut punch for individual investors. But let's face it, the last hour trading sell-offs this week and this month have been amazing, and to the point where now I think they're self-fulfilling. And so with that in mind, I think the big buy signal would be when we get a big rally into the close. Nevertheless, buying into the close is when you make most of the money. At least it's worked big time over the last 10 years. So to help us find some ideas, I've got Scott Martin and David Dietz with me. And Scott, first of all, your thoughts on these sell-offs in the last hour of trading. It feels like now it's sort of just it's just knee-jerk at this point. What's causing it?
Yeah, and status quo. Yeah, and to be expected. It's a lot of things, Charles. I mean, there's probably some margin liquidations going on. There's rebalancing. And there's other things going on, too, especially today with crypto, that seems to be pushing other things down. So, look, the sell-offs, as you said,
wait a minute.
become
so
psychology.
Crypto is leading the equity market now?
Well, here's the thing, man. That a lot of the malaise that's been in equities, say today, I think, or this week, has spread over into crypto today because they're way outpacing the losses in equities today. Bounced a little bit, but not near as much as equities did this morning. And now you're seeing accelerated selling into the equity close just now. So right. I think that's one thing feeding the other. Maybe the cat leading the dog. The point is, Charles, just quickly on the sell-offs. The problem with the late-day sell-offs is once you get a few of these, like you mentioned, in a row, that becomes expected and typical. So once the kind of, say, glass of milk starts to tip over, the whole thing spills out. But to your point, we just need a reversal of one of those two things, maybe 1 or 2 days, and all of a sudden the sentiment can change. But it won't change until we actually have some real buyers come in, which I don't see coming in today or even Monday.
Well, it was really tough on a Friday, the week ahead of the Fed meeting and all that stuff. But Dietz, same thing with you. I mean, what do you, is it just one of these things that begins to happen? It's a pattern. People anticipate the pattern, it becomes self-fulfilling.
Well, I think the last couple of days, the smart money did get out in advance. Charles, when you look at the overall market, those companies which have the highest valuations have taken the biggest beatings, while the more value cyclical stocks have held up better. So when you're coming into earnings, Peloton, I mean, the ultimate stay-at-home stock that was going to keep sinking further and disappoint, Netflix, the same thing. They're getting huge competition from Disney and similar. And so I think the smart money wanted to get out. But I'm more optimistic for next week because we're going to get some of the heavyweights reporting, right, the ones that are the rocks at Gibraltar. And so I think things in terms of selling off at the end of the day may start to shift next week.
We're already starting to see the sell-off. Scott, I know, I see you did a pretty intriguing trade here. I think you sold your Amazon and you're buying Netflix. You like this big dip, huh?
Yeah, we've been out of Amazon for a while. Look, I just like stuff on sale, Charles, and not when I'm buying shoes or something, for example, or other things I won't mention. The fact with Netflix is the fact that when a stock is down 20+% on a day, when the market malaise is widespread, typically you can get a bounce out of that name, not maybe on Monday or even the day of like Friday, but you can get a bounce in the future. So we're playing that one for a short-term trend. A quick note on what David said. He's right about the earnings heavyweights coming out next week. But the market sentiment and psychology has changed, meaning that you could even get good earnings at a lot of those companies that he's referencing, and the market could sell them, just because that's what the psychology is right now. So don't be discouraged if we get good numbers and they sell off. The media is going to go nuts about that. That actually could be a buying opportunity, saying that fundamentals are still strong and the market's just selling them willy-nilly.
David, I got less than a minute. I want to go over some of the ideas that you like or that you've been buying. AT&T, Gilead, and Walgreens. Feels like safety is the key here.
Yeah, absolutely. But, I want to highlight Walgreens. We have seen a nice move in CVS. It's up over 100 as people are coming back and seeing the value of the local drugstore during this pandemic. But they seem to have stayed clear of Walgreens. 80% of Americans are within 5 miles of their stores. They just upgraded the number of jabs they think they're going to put in arms in the next 12 months, 30 million versus 25. You got a 3.8% dividend. There's all sorts of levers they can pull in order to monetize, for example, their 29% stake in Bergen. I think the banks will do well with higher interest rates. Citigroup.
We got you. Hey, Scott, David, thank you both very much. So as I hand it over to